Hi, the Street Signal. This is our July update, and I'm here with Mikey P. McCarthy. How are you, Michael?
I'm doing good,
Well, that's good to hear. So you like to go through the economic indicators that are happening. So tell us what's going on in the economy. What indicators are happening there, my friend?
Yeah, so, at the moment we don't have a lot of topics to talk of. But there's a number of things on the news, and as Drew says every time, when they're talking on the news about the markets, it's always, mostly fear that they're trying to sell. So what are some of the real numbers we can look at? Well, CPI, or the index for looking at the inflation of goods.
And they're always talking about that lately.
Always talking about inflation.
Yeah.
Always talking about inflation. So last month, 2 months ago, May, the last number that was out, it was up about 0.6% with an overall trailing 12 months of around 5%. We know that the Fed, ideally targets somewhere around a 2% inflation rate. So we're definitely seeing higher inflation rates than we're used to. Now Drew has always talked about the risk-free rate of return, and that's tied to the 3-month Treasury, and the 3-month Treasury was up about 0.01% to 0.05%. So anything with, purporting a bunch of return above that means that you're taking some proportionate amount of risk.
That's the whole purpose of understanding the risk-free rate of return, because why would you make an investment that only gives you the risk-free rate of return or something comparable if you're taking on a lot more risk? So if you're going to get a better rate of return, there's obviously risk involved. Risk you could lose your principal.
Yep, absolutely. So we have, talking off of that Treasury rate, the Federal Reserve has been still very amenable to the markets, but, increasingly vague as you expect them to be. Drew, any thoughts on that?
They're always vague.
Something that I thought that we wouldn't normally talk about right now, but when we're concerned about markets overtly, if the yield curve is inverted, which means short-term rates are above long-term rates, that is often one of those news items used to say, oh, it's coming. Well, not to say that we know how predictive it is or isn't, but at the moment the yield curve is normal. The longer you go out, the slightly higher your rate of return is. Another indicator that I like is the U.S. savings rate. So the U.S. savings rate spikes whenever there's a lot of overt concern about the markets and about the economy. And we saw in the beginning of the pandemic a huge spike. During the first resurgence, a huge spike. But we are continuing to see that while the savings rate is still quite up above its normal amounts, it is starting to return towards the normal amounts. That's the direction it's heading in. And then with that, the first 2 quarters of the year, the GDP has grown in a way. And I think one of the things to think about when you're talking about the GDP and growth as a whole number is that the GDP is looking at everything. So you may have many industries which are still depressed, but other industries have grown so much to make up for them. So we're seeing rising GDP. And lastly, probably one of the most closely talked about indicators right now is the fact that U.S. unemployment rate is still high. It's up at 5.8%. As of May, the last number's out as we shoot this. But the peak is around 15%, or was, and normal is somewhere around 3.5%. So we're seeing a decline, and I think Drew and you and I have talked about the fact that as the federal programs for unemployment dry up, we expect to see, improvement in that number.
Yeah, well, the unemployment program is out of control right now. You got to encourage people to go on into the workforce, find jobs. There's tons and tons of jobs out there, but you got 2 problems. You got people saying, I'm getting too much money to go to work, and then you got the other side of the coin, which is the jobs that are available and abundant require certain skills, and so you got a kind of a mixed bag as to what's going on in that regard. But anyway, the point of the matter is that things are returning to normal. There's no reason for overt concern one way or the other. Don't worry about politicians. Don't worry about politics. Focus on the numbers, and especially the Federal Reserve. Federal Reserve is positive. So let's talk about some other general topics. I get a lot of calls lately from clients, and I just wrote an article about this, saying that, that clients are getting a Form 5498. And all it says is you made an IRA contribution, or you made a Roth contribution, or you did a rollover, and here's the fair market value of your IRAs and your Roths, and here's your required minimum distribution for the year, and things like that. But it looks like a really cool, official IRS tax form. You needed to do
Well, they think
taxes,
they're late.
and they're late.
They think they got it in late. Yeah.
They got it in May and June, and you're supposed to get it in March or February, so you can give it to your tax person. But the 5498 is not a important tax form doing your taxes, is it?
No, unless they got it wrong.
Unless they got it wrong. But I've been looking at 5498s for a long time, and I rarely see them that they're wrong, and
Right.
we got plenty of time to correct them also. So Form 5498 is an informative form that Schwab or Fidelity or TD Ameritrade, whoever your custodian that we use, or whoever your custodian is, they send it to the IRS to say, Drew or Mike did this in his IRA, did this in his Roth, da-da-da-da-da-da. And the IRS...
Make sure he reported it correctly on his tax return.
And the IRS throws it into their audit tax programs, and then they run these algorithms that say, this tax return with this tax ID number and this 5498 with this tax ID number said X, and that means that you shouldn't have done that. Boom, send the letter out, tell them to get it right. Come into compliance.
And that ties in, yeah. Well, and that ties into something else we wanted to talk about, which is, the IRS in general and dealing with the IRS. But specifically from that example you were giving, Drew, with the 5498, is if the IRS computers detect a problem, they're going to send a letter saying, hey, we think you made a mistake on your return, and maybe we think you need to pay us this much money, or maybe we're going to give you money.
They don't say, I think, Mike. They say you do.
Right.
End of the story. They don't say, hey, you might have done something wrong here. They just say, my computer program says this is wrong, therefore you owe us a penalty, you owe us money.
But when you read it, you should read it as might, because the important thing is to not just blindly accept the IRS's determination, but to verify and actually calculate, was there a mistake or was there not, which I would say also includes when they want to send you money, because you don't want to take it unduly and have them come back later for it.
Which brings us to one of our other topics, is that a lot of clients are getting IRS letters. We're getting clients with IRS letters that say you owe us money. We're getting clients to get IRS letters that say, hey, you got to get us more information to be able to finish your return. We get clients that get IRS letters that are just saying, we don't believe that the tax return you sent us is really you. You have to verify that the return we have was really you that sent it. And here's how you do it. And the letters absolutely are mind-boggling. They give you a phone number, tell you to call it. Every time you call it, it says, we're overwhelmed. We can't take your call. We're disconnected. I call at 7 o'clock when they open the door, okay? The minute the computer says 7 a.m., I go, boom, speed dial. And I call them, and they say, we're overwhelmed with calls. Now, you're telling me that there's that many Americans that are waking up at 7 a.m. and speed dialing the IRS at 7 a.m., that they're overwhelmed with calls? There may be 10 people out there. Maybe there's only 5 IRS agents that they're overwhelmed with calls. I have no idea what's going on. The IRS is a mess right now. It is an absolute mess. But here's the key to our clients. Do not try to deal with the IRS yourself. Right? You understand that? You're listening to me, Mikey, huh?
I'm listening. Yep.
Don't try to deal with the IRS yourself. Don't try to verify what they're saying. Just call us up and verify that you are. Don't try it. Call us first. Call us first.
Yep.
If they're saying you owe money, don't believe it. call us first. And I have to admit, prior
Okay.
to 2020, when a client would get a letter from the IRS say they owed money, about 80 or 90% of the time, the IRS was probably right. And we were going to have to fix something. I'd say it's about 80 or 90% that they have no idea what they're talking about now. Absolutely perplexing as to the letters we're getting and what we have to deal with. And calling me, I had one where the IRS agent literally said to me, I have no idea what this letter is, why it was sent to you, and why it says that you owe money. And she says, I can't explain it. I literally have no notes in here. I see the letter going out to you, but I have no understanding as to why they're saying what they're saying.
Right.
And I said, well, that's really helpful. I can resolve this.
A moment ago, you were talking about your frustrations calling the IRS. What about your frustrations of when the IRS calls?
Well, that's a big topic nowadays. There's a lot of thieves, criminals that are calling people and saying, this is the IRS, you owe us money. You got to give us your Social Security number and send us money immediately, or else we're going to repossess your firstborn dog. Nowadays, repossessing the firstborn child isn't as important as repossessing the firstborn dog,
But nonetheless, the IRS doesn't call.
The IRS never calls. If you get a phone call from the IRS and you haven't gotten at least 15 or 20 letters from the IRS saying that you owe money and you didn't respond to those letters, then the IRS might call, or they might come knocking on your door. But if you just get a phone call from the IRS saying, hey, here we are, we're coming to get you and take you away to the funny farm, and we're going to take all your money, it's not the IRS. And if Microsoft calls you right after the IRS calls you, it isn't Microsoft. And if Apple calls you after Microsoft calls you to tell you that your phone's been hacked, your computer's been hacked, you need our protection, you need to do this right away, no, 100% confidence, somebody is trying to scam you. Hang up, do not call back, leave it to voicemail, don't deal with them, et cetera, et cetera.
Yeah, the IRS never calls. They send letters, and then if you don't respond to the letters, eventually you get a summons. You don't respond to the summons, eventually you see your money disappear out of your account because they garnished it. They're not going to call.
No, they won't call. And
Microsoft does not call.
The IRS may theoretically show up and talk to you, but they should have a badge, they should have a number, and you should be able to call somebody and verify that the person at your door or whatever, or your office, that is a common thing that they have been doing to some degree. I've never had a client of ours had that, but I've read many an article about this new approach of the IRS going out, softer, gentler, kinder, coming to your house, talking to you, asking you if there's anything we can do to help you get this worked out. But calling you on the phone, no, never happens.
Right.
So anyway,
Drew, we don't have much time left, but I know you wanted to talk about Social Security taxation.
The taxation of Social Security is bizarre. I wrote an article on this, Mike, called The Most Evil Form of Taxation. I'm hoping every single client will see that article and read it, because it is a topic that needs to be communicated to the public as a whole. There needs to be an uproar about the way Social Security is taxed. And I'm not going to go into the whole article as to all the reasons, but let me just give you one big reason why the taxation of Social Security is so wrong and downright evil. And that is that the laws to Social Security taxation, if you make so much money, then a portion of your Social Security becomes taxable. If you make more money, more of your money becomes taxable. When they passed those laws in 1982, Mike, it was $25,000 for a single, $32,000 for a married couple. And if your income exceeded those numbers, and based on a formula, you had to start paying taxes on it. Now that's almost 40 years ago. Okay? Today, they're $25,000 for a single, $32,000 married. The equivalent.
So what about all that inflation we just talked about?
The equivalent. You ought to be not the color man. I guess I'm the color man, right? You're the straight man. You're the straight man, right?
Yeah.
Is that what they call it in television? You're the straight guy. You feed the questions to me.
This is like you and I talking about music.
Anyway, the rate of inflation, adjusted numbers, 25,000 would be the equivalent of almost 75,000 today, and 82,000 married in today, adjusted for inflation. So here's the question: is it really somebody making 75,000 or less should be paying taxes on their Social Security? When back in 1982 they shouldn't have been paying taxes on their Social Security? What happened? What changed? Why do those same equivalent income people today have to pay income taxes? And the income taxation of Social Security is downright means testing Social Security. So in essence, if I'm right that it's means testing Social Security, they means tested away somebody's Social Security if you made more than $25,000 in 1982, but now they're still doing it at that same $25,000, which is the equivalent of probably somebody back in 1982 making something in the neighborhood of $7,000 or $8,000 back then.
Right.
It's just absolutely embarrassing that nobody is bringing this up. Where's AARP, the great defender of the seniors, et cetera, et cetera? Are you getting the point, Mike?
I think I got the point.
You got the point.
I think I got the point. I think we're running out of time.
You're trying to get me off the air. Is what you're trying to do.
I don't want you to go over the edge.
Anyway, we're finished, Mikey. It's Strict Ignanelli saying God bless.